Today, the semiconductor market is under significant pressure, as we can see on the stock map. Semiconductor companies such as Nvidia, Broadcom, and AMD are declining, and we will analyze them thoroughly today. We will also look at the technical analysis for these companies. I will definitely touch on volatility. Additionally, we will examine support and resistance levels for each of these companies and see the potential movement of all these companies in the future. Let's start from the very beginning. As we can see, the entire tech sector is starting to decline. This includes not only semiconductors but also other companies. I also remind you that not too long ago, Nvidia was the most expensive company in the world. So we cannot ignore these moments. Let's analyze what is happening with these stocks. Firstly, let's discuss the most important one, Nvidia. As we can see, the stock has dropped to the level of $118 and has not yet been able to break this support level. Let's look at the volatility and what is happening here. As we can see, volatility is starting to gradually increase, reaching a strike of up to 60%, but on average it is 50%. This is not a very good sign because the higher the volatility, the more unstable the stock behaves. I also remind you that such high volatility, given that the company is the most expensive in the world, is not normal. And again, this is one of those facts that I have always mentioned, suggesting that sooner or later the market is expected to face a serious decline, but I will discuss this in another video. Returning to Nvidia, let's immediately look at the volatility smile. As we can see, the volatility smile for nearer-term strikes is directed towards both the increase and decrease of the stock. However, if we look at longer-term data, the volatility does not grow towards calls upside, but it grows towards puts downside. This is a normal situation because investors and traders are hedging their stocks. And this is certainly a reasonable decision because the stock may start to drop significantly. This is evident from put options being more expensive than call options. Now let's look at the historical implied volatility. As we can see, the historical volatility is the gray line, and the implied volatility is the white line. Currently, the implied volatility is higher than its historical values. Again, this indicates an increase in volatility, suggesting that the stock may experience instability in the near future. Now, let's look at the most important aspect, support and resistance levels, as well as the trading volume of options. As we can see, there are substantial volumes for both call and put options. However, I want you to note that put options have also been activated earlier. Previously, calls outweighed puts in volume, but now put options are also very significant, and we have substantial levels here. Let's examine the levels of $125 and $120 for call options. Again, the $125 level served as a very strong support yesterday, but that was yesterday. Today, in the pre-market, we are surpassing these levels. And I always remind you that options do not trade in the pre-market, so market makers do not have the opportunity to influence the price. Therefore, if we break through levels in the pre-market or post-market, it may indicate that the level did not hold. The next significant level is at $120. Right now, the market has just opened, and there is a battle for this level. We must closely observe this. As we can see, Nvidia has slightly rebounded, but this concerns call options. Now let's look at put options. We have very significant support levels. Put options currently serve as support at $120. There is slightly less volume at $119, and the most critical level is at $115. So in fact, there will be a massive battle for the $120 level today. I actually believe that we won't be able to break through this level on the first attempt, but the next resistance will be at $115. If we again surpass $115, then it's a signal for major trouble. Nvidia's stock may start to fall sharply without stopping. However, it's important to remember that these levels change, specifically by the end of this week, i.e. by July 19th, highlighted in yellow after July 19th. Things may change slightly. I also remind you that the $120 level needs to be defended not today, but by the end of the week. So while today is important, we will assess the real situation at the end of the week to see what has happened and what will happen next. Now let's look at the market forecast and what is happening here. If we look towards the end of the summer, the market predicts that the price will be around $115 to $118 on average. This indicates a slight decline, which the market forecasts for Nvidia's stock. I have always pointed out that the market predicts a drop in this stock by the end of the summer, and this may already be starting. Let's now consider the forecast for the end of the year. We see that by the end of the year, the market predicts a price range of $100 to $116. This is quite a wide range, but it still indicates a decline. This concerns Nvidia's stock. Now let's move on to the next stock, Broadcom. It has also experienced a 5% drop, and like Nvidia, this stock has grown by 308% over the past 2 years, which is of course a lot. There was also a recent split of 10 to 1. Currently, the stock is falling. Let's analyze in detail what is happening here and what the support and resistance levels are for this stock. The volatility actually remains at a stable level, around 35 to 40%. We have seen a decline in volatility and now a slight increase, but this is normal. Unlike Nvidia, Broadcom stock volatility is more stable, which adds more stability and confidence in this stock. Additionally, the stock pays good dividends, which were especially attractive when the stock was around $40 to $50. Now, of course, the dividends are not as significant. Let's now look at the volatility smile. We see that the volatility smile is directed towards both calls and puts. Here, the situation is not as unambiguous. Investors and traders are hedging both ways, indicating that the stock could either rise or start to fall. Let's now look at the historical implied volatility. The historical volatility is represented by the gray line, and the implied volatility is shown by the white line. Here, the situation is the opposite of Nvidia, because the implied volatility is below its historical levels. It is essential to consider not just one stock but all semiconductor stocks together to evaluate the situation accurately. Broadcom's situation, especially regarding volatility, is somewhat different from Nvidia's. Now, let's examine the support and resistance levels as well as the trading volume of options. We can see that there is a very high volume concentrated at the $170 level. This level has been a significant support and resistance point, and as we can see, it has been challenging to overcome. Today, again in the pre-market, we have broken through this level. However, we need to observe what happens by the end of the week, as only then will it be clear how the market closes. Let's also look at the market forecast for Broadcom. For the end of the summer, the market predicts a price range of $150 to $160, indicating a slight decline. If we look at the market forecast for the end of the year, it predicts a further decline, with prices around $140 to $145. This is the outlook for Broadcom. Now let's examine AMD. The stock is also experiencing a decline, down by 8%, which is quite a significant drop. Let's analyze the volatility and the support and resistance levels for this stock. As we can see, the volatility for AMD is starting to rise sharply. This is different from Broadcom. The average volatility for AMD was around 45%, and then there was a sharp jump to 55%. Now, for some strikes, it's at 60%. This is understandable because the stock is starting to fall. The lower the stock, the higher the volatility. This needs to be closely monitored. Let's now look at the volatility smile. Here, the situation is a bit different because the volatility is directed towards both call and put options. This indicates that investors and traders are factoring in both the rise and fall of this company. Now, let's look at the historical implied volatility. The gray line is the historical volatility, and the white line is the implied volatility. Again, the situation here is different from Nvidia and Broadcom. The volatilities are roughly equal, which is absolutely normal. When volatilities match, you can play not only the stock movement but also the volatility movement. Volatility always returns to its historical value, as we see in this graph. The most important thing now is the trading volume of options. We see a very significant volume of call options, specifically at the $170 level. This volume was surpassed in the pre-market, and now the stock is starting to decline sharply. A small tip: if you see significant support levels being breached in the pre-market, they are likely to be broken definitively. We also have a very large volume at the $160 level for put options. This is a good sign of support. We haven't reached it yet. For those holding the stock, especially if you're holding it with margin, I do not recommend this. But if you are, there is strong support at the $160 level. You need to watch this closely. If this support is breached definitively, not just for a few hours, the situation could worsen to $140 or lower. This is my current view, but I do expect that within this week we may drop to $160. Again, the most important thing is the end of the week. We need to watch where these stocks close at the end of the week. We also have very significant levels at $150, though not as critical as $160. Now let's look at the market forecast for this company. First, let's examine the forecast for the end of the summer of 2014, which shows a range of $150 to $160, indicating a slight decline. For the end-of-year forecast, the range is from $140 to $150, indicating a more significant drop. This pertains to AMD's stock. In reality, we have more semiconductor companies to consider. For example, Intel is actually growing, but I would like to analyze an ETF like SMH, which is focused on semiconductors. Let's analyze its volatility and market forecast. As we can see, the volatility here is also starting to increase, but this is a normal situation. The most important thing, of course, is the support and resistance levels. Let's go straight to them because we have already discussed quite a lot. For call options, there are not very large levels. The largest levels are for put options, specifically at $160 and $150. Let's examine them. At $160, we see that it has currently acted as resistance. Again, you just need to study the derivatives market more, and you will start viewing the stock market like a map or a chessboard, making everything clear. As we see, this is still very strong resistance at the moment, and it remains relevant. The same goes for the $150 level. This week, I believe it will not be easily overcome. Additionally, we need to watch what happens next week. Now, let's look at the market forecast for this fund in the long-term perspective. The market forecasts a range of $160 to $165. In reality, it remains in the same range, meaning the market does not predict significant movement in this index. However, if we look at the end of the summer, the market forecasts a drop in this index to $250 to $255. So, it will stay in the range of $255 to $265. Now, the main interesting question, why does the market predict a decline for giants like Nvidia, Broadcom, and AMD, but not for the entire semiconductor sector? This is because in addition to these three large companies, there are other companies like Intel and Micron. These companies also carry weight. For example, the market may predict a sharp rise for Intel, so more comprehensive information is taken into account here. As for companies like Nvidia, Broadcom, and AMD, they are indeed highly overbought. Objectively, Nvidia cannot be worth $3 trillion, and Intel cannot be valued so low. This means overbought companies will decline, while undervalued companies like Intel may grow. These are the laws of the market. Everything eventually balances out. Certainly, there is much more I could show you. Usually, I also present 3D volatility and I explain and build interesting strategies. But if I were to discuss each stock, the video would become very lengthy. Tell me how you like this format, where I review several companies in one video. If you like it, we can review different sectors, identifying the best and worst companies in each sector. But again, I chose semiconductors because they are currently real market leaders. If they collapse, the market may not hold. As I've always told you, sooner or later I believe a recession will begin, resulting in a serious crisis where some companies could fall by 50 to 80%. I believe this. What happened in 2022 was just a prelude to the real crisis because it was just about raising rates. It will be scary when we start falling due to lowering rates because the biggest drops occur when rates are lowered. I also recommend watching my video where I talk about my real portfolio, how I form it, and what strategies I use. Good luck to everyone.